happens, usually does. There we go.
Awesome. Thanks everyone for joining. If you are joining us, we are going to be having a conversation. So if you are in a quiet space where you can come off of mute, please do so. If not, you can also dialogue with us via the chat. You can also use your reaction button if you're not able to come on camera. We do want to see your beautiful and handsome faces this evening as we have a conversation, if possible. Well, my name is Tia Glenn, and I am checking in from the great state of Virginia in the DC area, Virginia. I have the honor and the privilege on tonight to introduce my mentor. He is an outstanding mentor, and he's one of the top money earners in the U.S., guys, in that top bracket. So I know that he is someone that you definitely want to hear from. He is helping so many people earn double-digit returns during this pandemic and having a ton of fun exposing the secret of the wealthy. He is a Duke University graduate, so he's also very, very smart, y'all. I'm telling you, if you are in a position where you can take copious notes, you definitely want to do that, because you do not want to miss any of this information that we are going to share on tonight, because it can truly change your life forever and the life of your financial legacy as well. So without further ado, I want to bring forward Mr. Richard Hardon. Richard, are you ready?
I am. I'm so ready to. I'm excited. I started listening to that introduction thinking maybe I should try to float across the room to impress y'all or something. But here's the exciting thing. There's nothing better than working with someone from a leadership point of view that has a servant's heart. Because quiet as it's kept, Tia Glenn is actually one of the leaders of our First Ladies of Finance movement here within MWR Financial. During her day, she's busy as a mother, wife, and CFO, Chief Financial Officer for major broadcasting networks. Some of the things that you watch on TV, she okays the budget for you to see them. So, and beyond those things, she set herself apart in her passion for educating people about this process of the financial makeover and putting people in a position where they're able to save, make, and grow their money. So if anybody deserves that, welcome those accolades. I'll give it up one more time for Miss Tia Glenn. Yeah.
Go Tia, yes.
And for our conversation today, we will be focusing on each area of that process. So as we go through our conversation, I do want to make sure that we tailor what we talk about to the interests of people here. We will focus on saving money. So understanding the contingencies that people have in their life, the places where money has been leaking out of most families' cash flow for years. We'll talk about ways to make money, and specifically for those of you that have an interest in real estate, either as an investor or already a part of a real estate practice. Making money with land makes sense to me. Put in the chat, let me know what category of folks that we have on the line so that we can be focused in our conversation. And my goal is to get the information across, but to get us out of here in a record period of time. Make sense? So if you're a realtor, real estate professional, investor, or someone looking to become one of those things, make sure that we know in the chat who you are so that we can help with that. While you're getting that done, let me tell you a little bit about myself. By way of background, name's Richard Hardon, probably not that much different than anybody on the line, meaning growing up, I was taught a basic set of things to do here in Atlanta, Georgia. They said, go to school, get good grades, go to college, get a good job with benefits, and live happily ever after. What does that mean? You need a house, a spouse, 2.5 kids, a dog, and a white picket fence. If anybody else got that message coming through, just show of hands or use the chat indicators. Just let me know that we're talking the same language. So I did those things to the best of my ability. I actually graduated top of my class from Douglas High School and got an academic scholarship at Duke University. And at Duke, I double majored, electrical engineering and computer science, because I was told technology would be the wave of the future. Got out into corporate America and realized that a large part of my education was missing, meaning I wanted to be wealthy. How many of you wanted to be wealthy? Turns out that a lot of my formal education taught me how to get a job, which put me in a place where the more I made, the more they took. So in this conversation today, I tell people up front, this will be a combination of education and invitation to collaborate, meaning I'm going to teach some things that I wasn't taught in school, but specifically an invitation to help other people learn what we didn't learn, because the way that you improve the community is you help other people learn the things that we didn't know. Does that make sense? So I'm going to share a couple of things from my screen. Can you see it okay?
Yes.
So as we go through this process, there'll be plenty of people to help me with our conversation, but I do want to make sure that people make the decision on who they want to be. If you're a real estate professional, judging the list of traits on the right, you know, because there are two categories of realtors, and I like to make sure that I'm clear when I'm talking to real estate professionals, when I'm talking to investors, who you want to be. On the left hand, you got average realtors. On the left, you got wealthy. And the difference between the two, even though the words are similar, the behavior is remarkably different. Meaning an average realtor, there are a million people that if you go to realtor.com, they'll get on and sell your house. But what I'm looking for is those people that are relational, that want to have that trusted advisor relationship, that when it comes to the choice between scarcity and mentality, have an abundance mentality, that rather than doing it on their own as an average realtor, they understand the power of leveraging a team of professionals and are never satisfied with what they know. But most important, they have that consciousness about cash flow and a plan to be wealthy. And in most cases, real estate is a part of the portfolio, not just the product they sell. Does that make sense?
Yes.
So before I go forward, let me know who on here is wants to be wealthy. Put that in the chat. If wealthy is what you want, if wealth is the goal and the objective, put that in the chat. If it's not, well, my friend Sean said, don't tell me. That stuff tends to get in your shirt and you can't get it out. Okay, wealthy, 100. Okay. We're talking to the right people. So as we jump in, here's a situation that most people in America find themselves in when it comes to the financial education piece. And the thing that we want to fill in the gap and help people understand better is a process called the financial makeover, which allows for that shift in income. See, the reality for most Americans after 1986, we have to accomplish during our working years a concept called a shift from employee to investor. Now, why is that? Because the rules change. Like the rules that went with get a good job and work for them for 40 years and live happily ever after was based on the idea that after you work those 40 years, the employer would take care of you for the rest of your life. After 86, most employers went from defined benefit to defined contribution, meaning you become an investor whether you want to or not. Am I making sense? Mm-hmm. So across our lifetime, what we have to do is figure out how do we get from the highest tax category, which is employee, through business owner into the investor quadrant. And the exciting thing is we found a way to make that reality for everyone. And it's first by increasing cash flow, second, building business income, and third, creating an investment income. All of those things, we're going to talk about how that happens in our conversation, and we simplify it into understanding the power of cash flow. And this is a place where I have to admit my Atlanta origin gave me a disadvantage. I did not understand cash flow. Am I the only one? Meaning, no. Dana, for real, I thought cash flow and income were the same, but they're not. See, cash flow is measured in time where income is measured in dollars. And the simplest example is just taking an income. If you make $1 million a year, but you have $2 million in bills, cash flow is 1/2. You're half a period short, just broke on a higher broke level. But if you make $80,000 a year, but your bills are $40,000, 2/1, you've got twice the cash to flow through 2 periods so that your money has more time to do more for you. We teach people the process of increasing cash flow because 3 things have to go down and 3 things have to go up if your cash flow is going to increase. So if you think about just a simple process, if we increase your credit score, minimize taxes, minimize expenses, minimize debt, that's the first strategy in increasing cash flow. Make sense? Yeah. Now, I jump ahead really quickly to this document right here because this is the difference between people that understand themselves as a business and how the bank sees them. It's called a cash flow statement. Who's seen this before? Okay, who is this the first time? Because I do want to make sure we do a good job of letting people understand. In America, you're born a sole proprietor. You are a business and the banks and the government look at you in that way. Most people understand the income statement, meaning income is the money that comes in, right?
Right.
Expenses by definition is the money that goes out. Liabilities are things that take money out of our pocket. That's the definition I'll use. It's not my definition. It was one of my favorite financial educators. It was Robert Kiyosaki and Rich Dad, Poor Dad. Does that make sense?
Mm-hmm.
Hang on just a second. I'll be right back.
Got me all excited, and he walks away. Uh-oh.
Right. I'm like, wait, I want to hear about assets and liabilities. Wait a minute.
Jeez. Just way to leave us hanging, Richard.
I apologize. My dog was about to get really fired up. This is going to be a whole different kind of recording. But if you think about this process with expenses, what people don't recognize is that the two biggest expenses in most people's house don't usually end up in their budget, meaning two biggest expenses in your home. Matter of fact, put in the chat, what do you think the two biggest expenses in your house are? My kids, spouse. Now, Tia's got it. Number one expense is taxes, followed by interest, right? You think about, for most households, taxes and interest eat up about 2/3 of the income that comes into the house. But food, transportation, rent, any of the things where the money goes and the thing is gone, that's an expense. Liabilities take money out of our pocket. Liabilities, now I know some realtors will get upset with me when I put our house on the liability sheet, but Dana, how does your house act in your life?
My house is a liability. My properties are an asset.
Yeah, it was one of those things. It took me some time to understand what he was saying when he placed it this way. But when the bank says your home is your number one asset, it's your number one asset as far as they're concerned.
Correct.
Because if you got a mortgage on that house, you're going to pay them for the length of time that it takes to pay that back. It hits their asset sheet. It puts money in their pocket, but we have to live somewhere. But the other liabilities that are common for people, cars, student loan, credit cards have gotten huge lately. And our goal is to start building a process, a portfolio of assets, things that put money in our pocket, preferably without us having to go to work, right? So if you think about common asset classes that people have been taught, stocks and bonds and mutual funds are categories of paper assets. You got real estate, private lending vehicles, collectibles, businesses. All of those are things that put money in our pocket. So if we want to go from where we are to wealthy, the first thing we got to do is understand our personal cash flow statement, right? Your personal cash flow statement, and just figure out where you are. What Rich Dad said, and again, he said on the left is the cash flow pattern of the poor, meaning they got one source of income is the job, the money comes in and it goes out the window through expenses. Middle class, money comes in from the job, goes to pay for the liabilities, the house, the car, the student loans. And a lot of that money goes out as interest expense. Does that make sense?
Yep.
And the far right, if the goal is to have infinite cash flow, we've got to get to the place where we have enough assets generating enough income to complete our lifestyle. Matter of fact, that'll be our agreement. We'll agree for this definition for wealth today. Instead of wealth being a million, bajillion, trillion dollars, you hit the Powerball, let's just agree that wealth is, you're wealthy when you get to the place where you can live your current lifestyle without anyone in your house going to work again. How's that?
Love it.
Good definition.
Beautiful.
Right.
So how do we do it? The first thing is we got to understand the enemy that is attacking us. And in our process, we built up step by step things to do in a certain order to get our financial house in order. If you've ever read, has anybody ever read Dave Ramsey's book, The Total Money Makeover?
Yeah, not all of it.
Right.
I have it, but I didn't read it all.
I had a hard time finishing it.
So here's the simplified version, because you got to do the steps in the right order. I know for me, when I figured out that I had somewhere between a poor and middle class cash flow pattern, I tried to do everything at once. I was $26,000 in credit card debt, trying to buy rental properties, also invested in the 401k. I was chaos. Does that make sense?
Mm-hmm.
Simplifying the steps just tells us this is how you do it in order that makes sense. And we provide a team of experts to facilitate this change. But the foundation for anything that you do when it comes to this financial house is that mindset, the education, a game plan, and a team. Put in your notes, you need a team. If you're already busy enough doing what you do during the day, you can't do everything. You can't be your own tax professional and your own debt elimination specialist and your own financial advisor. It just doesn't make sense. So having a team in place helps us to delegate things to people who do them well. Make sense?
Absolutely.
Then we got to do our money first on paper. Written budget will save your life. 10 things on paper takes up way less space than 10 things in your head and increases the chances of 10 things getting done. But we've got to build our budget where we're living on less than comes in. Does that make sense? More than enough. And we'll talk about how to get some of that back in the house. Build a mini emergency fund. If you want to be an investor, you need some cash on hand because things will happen as soon as you start doing something positive. How many of you know something negative happens right away? It's usually somewhere between $1,000 and $3,000. I want to invest, tire blows.
Right.
I want to invest, need a new air conditioning unit. Right between $1,000 and $3,000 in a cash equivalent, push you in a place where now you can securely invest and then snowball that debt. We got to get out of debt. Put this in. It doesn't matter how hard you turn on the faucet. If you don't put the plug in the bottom, what have you got? Still an empty bucket. You got to plug the leaks in the buckets, and the debt are the places where we show up on the bank's asset sheet. We have a set of strategies for helping people get out of debt in record time, and that gives us that ability to build that true emergency fund, which is at least 3 to 6 months of your living expense in a cash equivalent, just in case something happens like everybody has to go inside for a year. How many of you did 2020 catch by surprise?
Absolutely.
Last, invest for long term, getting to the place where first we build enough income to sustain that wealth class of funding our lifestyle. And then the proof on top is once you've gotten to that place of basic financial freedom, expanding and the ability to give more. When we get to this place, this is what we call our financial fitness game plan. And as we take these steps individually, I'll talk about how our team of experts has helped us with this process. Step by step, word for word. Make sense?
Yeah, absolutely.
Yeah.
So who are we fighting? This is the enemy. If you ever wanted to know who is they, when y'all heard the phrase, the more you make, the more they take.
Mm-hmm.
If you ever wanted to know who they were, but they didn't tell you who they were, it's taxes, debt, big business, and they work together systematically if you think about it. For average working person, 33% of their income goes out the door to taxes, and then every dollar they spend after that income is taxed. Now, as realtors, you have an advantage. You at least get to play with your money all year and pay on the back end based on how much you made, right? Mm-hmm. But here's the kicker. Because you're in that high income bracket class, you could easily go from 33% tax bracket to 39 just based on a couple of good months in the field, yes?
Yeah.
Now, but this is what happens with that. That causes people to go into debt because now that so much has gone off the top, oh, you don't have the $400,000 for the new mortgage or the $50,000 for the new car? Don't worry about it. We'll give you a loan, a mortgage. That keeps the asset classes working in favor of big business and big government. And then the combination of things that are happening right now in our economy, I think, Stephanie, makes it even more imperative that people do something to take control of their income. Because in an average year, inflation's about 4%. But if you started hearing about and seeing the results of hyperinflation, meaning simple things like toilet paper that used to be 12 is now 20. Gas, which was around 2, is now 4. If people don't, and what that does is it makes the dollars that we make worth less because it's currency, not the same kind of asset. And then with the rest of the advertising campaigns, we already know Thanksgiving, Black Friday, and Christmas, the retailers treat that all like it's the same holiday. Did you see both Thanksgiving and Christmas decorations in a retail place here recently?
Yep.
So and it coincides. Their fourth quarter is where they try to get the last third of the money that was left, with taxes taking 2/3 and big business taking 1. But we do have a solution in that process in the financial makeover. Oh, by the way, let me say, the things that I'm about to talk about are things that I've been through, right? Mm-hmm. Meaning when I got together, when I started partnering with our team, really focusing on my financial education and my financial fitness, what our team of experts were able to do for me in terms of helping me save the money that I was making first. Put that in your notes. Your income is a source of wealth for somebody, You just have to decide who that is. Second, they help me to generate additional income. But the third thing is they really help me mature my passive income portfolio through vehicles like private reserve accounts and land banking. I know many of you might not know what that is yet, but hang on, we'll talk about it in just a minute. But the first place we start is at home. Everybody say start at home.
Start at home.
Start at home, and we're going to teach 3 things down, 3 things up, and have a team of experts that works with people to do this through our invitation-only membership program, where we help people get their taxes down, their debts down, their expenses down. You know what happens when those things go down?
Your cash flow.
Stress goes way down. And at the same time, if your credit scores are up, income is up, and your cash flow is up, it's easier to cultivate that attitude of abundance because you can see clearly on paper that you have more than enough. And that's what we do. And then we have a training system and education in place so that you don't have to rely on the person that introduced you. Just plug into the system so that you get 100% of the information. Now, how does it work? First level of collaboration partnership that's available is just member only, getting access to my team of experts for less than $2 a day, $80 a month in the Financial Edge membership. Write that down in your notes. Financial Edge membership. Membership has its privileges. This membership has been worth more to me than any club I've joined. Meaning, with this one membership, they help me lower my taxes, destroy my debt, shred my bills. They help me raise my credit score, and they put me in a place to increase my passive income, all through getting my money back. And how did that work for me? Well, the first thing that we focus on is tax reduction and debt elimination. Working with our team of experts, they went through a process with me, analyzed what I had been doing from a tax strategy point of view. See, the problem is that most people don't deal with taxes until April. The reality is taxes are crushing us every day.
Yeah, that's right.
So the experts worked with me, got a tax reduction, which increased my pay from work, so that I got an extra $636 per check. That's $1,272 per month in take-home pay, which I was able to apply to the debt elimination system and knock out $52,000 in credit card debts in a year. So that as those 2 things started to work together, instead of money flowing away from me the way that it had been, I increased my cash flow just on those 2 strategies by close to $2,500. And then when we increased the credit scores, I went from the mid 7s to right now I'm sitting at 824.
Winning.
So we're able to renegotiate, refinance this mortgage, rental property, pay another rental property off completely, to the point where the savings, matter of fact, you know what happens when I say the word savings, Dana? People get confused. They start thinking I'm talking about a coupon or a budget that's so tight that you can't breathe. I'm talking about rescuing the money, meaning I was making this money, the IRS had it, and Discover Card and Visa had it. The experts helped me get my money back from them, and that put me in a position to make more money. Now, the blessing is, it's not just me. I do have a couple of other members that have had access to our membership, and that has helped them differentiate their business practices if they're realtors. It's helped them save and increase and grow their personal profitability and build that nest egg. So if anybody else wants to share what the membership has done for you on the savings side, and we'll come back around to, now that I've got this ball of money, what do we do next? Does that make sense?
Most definitely. So, hey everybody, I'm Stephanie Stewart. I'm a realtor here in Milwaukee, Wisconsin. I'm servicing the Wisconsin area. So when I came into it, I was just starting out as a realtor and didn't realize that we jump into a 1099 tax state via what's called a Schedule C. There's tax deductions and all this jazz that nobody told us in real estate school. So there was able to have a an app called Hustler or TaxBot, and that was able to really track all of my mileage, track all my expenses, really get everything in line, so that when tax time does come, I'm a lot more confident where the IRS is not going to give me those higher tax cuts, so I'm not paying that 40%. In addition to saving myself from those high taxes, because believe me, they will eat up every bit of money you have, I've been able to increase my credit score to a 720. Woo, woo. I've been able to be debt-free As far as all my credit cards and stuff, that saved me $32,000 in interest. This positioned me better to now have lower insurance rates. Now people call and throw me credit cards and all these different possibilities, like, oh, do this and do whatever. So it's just a whole nother level that I've never really had experience with. And that's been able to really catapult me and everything that I've been doing with my investments.
Excellent. Excellent. Anyone else? I mean, and let's make sure to recap that. The Hurdler app is like the best digital assistant for people that are busy entrepreneurs for keeping track. I know the real estate professionals that I work with like the fact that it does individual profit and loss for you by client if you choose it. So there's a lot of the capabilities without you having to become an accountant part-time. Does that make sense? And it's a part of the membership. Does that make sense?
Yes.
Oh, go ahead, Dana.
No, I was going to add to that also. Like Stephanie, I'm in real estate also. I'm a real estate investor. And a couple years ago, maybe 2 or 3 years ago, the tax laws changed. So the amount I was able to deduct shrunk to $10,000. Now, mind you, we have multiple properties, so we were deducting everything. So to have that shrink down to just $10,000 for a couple of years, I was paying up to $8,000 a year in taxes because of the properties we own. Once I became part of MWR and I started using the experts and using that 800 number also, we went from paying $8,000 a year to getting back close to $12,000 a year just in the monthly stuff we were able to take out of the check. So paying 8 and now getting 12, that's a $20,000 jump in taxes. Then credit score started to jump. So we were always in the high sixes, like 690, 680s. Now my wife is in the high sevens. I'm at 792, not yet an 800 club. I'm like, I'm reaching for it. I'm trying, my hands keep slipping. Like my grip's not strong enough yet. I'm trying to get to the 800 club. But we did 3 refis this last year because of low interest rates and because of my high credit score. And we get banks calling us. Like I get so much interest in my properties between people wanting to buy it and the banks saying, hey, would you like to refinance? You know, what's your rate? So now I got banks reaching out to me, not because of the market also, but because our credit scores are high enough, we could pretty much, negotiate our own rate. And we did 3 refis already and was able to cash out with 40 grand this year because of what the experts are able to do for us also.
So again, and thinking about this, I mean, if I heard Dana right, is $80 a month got him $20,000 last year in the tax bracket, then another $40,000 in the debt to income bracket. Having people that are good at a thing and only do a thing, it lets them frame up what they do well so that you can walk in your anointing. That's good. Everybody give it up for Dana.
Rich, that's not, and also the rates dropped with the mortgages. So now we're also cash flow heavy, another $1,100 per month from the rental properties.
Wow, man, that is powerful. I mean, does everybody start to see this picture of right now? I mean, this is what most people don't think about, Stephanie and Dana, is that there's a team of experts out there on the other side already. Like the IRS is an expert at extracting money from people, but we have a team of enrolled agents with the IRS. It's the highest level of certification that goes through, does the diligence to make sure that we're getting the maximum pay from the work we do because they did not go to work there. And at the same time, using the business benefits that are still available through the tax codes to maximize our cash flow so that we can do more things and make more investments. And we could actually go all night with people that have had results and impact from using those 3 things. But if you think about the profile, because I know if you're a real estate professional or investor here, you're hearing a community of people with high credit scores, low to no debt, which means they have great debt to income ratios and an appetite to have their money make more money. Are those the types of clients you want and want to attract?
Yes, yes,
Yep.
and yes.
So as we go through, and again, I say all kinds of people from all walks of life have different things happening for them with the membership. But after we go through that process of helping people save money and have that access, the next part of the membership I want to talk about is the growing piece, meaning MWR has what we call the passport, and it's the passive portfolio to take the journey to passive income. If the goal is to have assets that replace us at work, we got to have different vehicles than what we were taught in school. Because I know for me personally, when I was growing up, what they said was when you get that good job, you're going to need a checking account, a savings account, put some money in your 401k. Is that about what they told you out there?
Mhm.
Turns out that think about this, the biggest investment that I had outside my rental portfolio was in an account I couldn't touch till I was 59 and a half.
That's
If
crazy.
you want to be wealthy at 50, that's a problem, isn't it?
That's crazy.
So what we talk about, and we'll talk, our wealth accumulation system is comprehensive. We do more things than what we'll talk about today, but for the focus of this conversation, want to talk about first becoming your own bank and how that supports our investments in real estate and land through a concept called land banking. Because I know certainly for me, one of the things that was eye-opening was the idea that I could become my own bank through a private reserve account. Now, since I've been talking, I've recognized that both Tia and Dana have had the opportunity to work with our experts on the private reserve account. Can you tell us about both what the experience is like, but also let people know if they hadn't heard that they could be their own bank, why this is significantly different than the bank down the street and the 0.01% that you get on the money there. And I'll let you guys choose. As a matter of fact, let me pause for the cause and drink water as you share.
Go ahead, Tia.
So the private reserve account was just so powerful because it allows your money to grow risk-free. And so very similar, but different and better than like a 401k or a TSP plan if you work for the federal government. Because with a 401k, when the market takes a dive and the stocks go down, your 401k goes down with it, as did about a year or so ago. But with the private reserve account, you are able to have your money invested and growing with the market. And if the market goes down, your money stays invested and continues to grow, no risk of loss. And if you borrow from your money, the total value that you placed in the private reserve account continues to grow with the market. That is powerful because with the 401k, you take a loan against your 401k, whatever that amount is that you take out as a loan is no longer invested and growing. But with the private reserve account, your money stays invested and growing at double-digit often returns, as opposed to the less than 1% interest that your money is getting sitting in the bank, as your bank is lending out your money and earning interest at double-digit returns. Why not get some of that return for yourself?
And it's so powerful. And well, I mean, I want people to catch this concept, because if you think about the rate of return, what we're seeing in private, I'm not on screen, am I? Just disembodied voice talking from nowhere. The rates of return on the private reserve account, because I know for me, the process of saving up that nest egg for the next transaction, I was always putting that money in what I call my offshore account, but really it was just my credit union, right? And the money was making somewhere under 1%. To have the money that I'm putting aside to invest grow at 12 to 14%, it did 1,000% better, 1,400% better than the money in the bank. And then, Dana, I love the concept you talked about becoming your own hard money lender for the deals that you wanted to do. You want to share that concept just so that people are familiar, because it's exciting what we can do with leverage.
So here's the cool part is this, that most people who, if you talk to a person who's into business and they need certain cash for certain deals, their only option is just keep their cash in a bank where it earns nothing. If I just spoke to a gentleman, his business makes over $1 million a year. He keeps anywhere from 50 to 100K just in a bank account for incidentals. So he's been trying to figure out, how do I have that money earn interest while it's sitting there? So I told him, listen, that's what this account is for. Because if you put your money in a private reserve account, which is actually an insurance vehicle, it's called the Index Universal Life Insurance Program. It's just like getting any other type of life insurance program. But the difference is this much goes towards life insurance And then you can dump a truckload of money into that same account and just watch it grow. It will never drop, just like Tia said, and you could always have access to the money. Now, not the same type of access as your ATM, but it's your money. The same way you would apply for a loan at a bank, all you have to do is borrow against the same account. You're going to pay yourself back the interest. So while your money's in there growing, you never touch the principal amount. You just borrowed some of the money against it. So that same amount grows. Now you've become your own bank. And now instead of borrowing money from banks or saving money and then spending it all and then saving it and spending it all, you're borrowing from your assets while they continue to grow. So as you're borrowing, they keep growing and you're still using that money. So now you're double dipping while your money continues to grow. That's how wealthy people stay wealthy.
And I mean, and this is the thing that you think about, Dana, Tia, and I thank you for sharing your experiences with it. But now we're in that asset class where all of the things that are normally the contingencies between people and their next deal. What's my credit? What's my debt to income? Where's my down payment? No longer are we parking money. We've got money in motion at all time. And that put us in a place where, as we talk about oh, go ahead, Dana.
And you never have to qualify for it, Rick, because it's your
money.
They don't care what your score is. They don't care, how much money you got in your pocket. It's your money.
I mean, and this is something most people never think about. Have you ever been in a position where the bank where your money is right now, your checking account, your direct deposit, your savings, and you've gone to apply for a loan at the place that their business is loaning out our money and been told, no, like you can't borrow your, man, come on. But here's the thing, that just having that as a foundation for a place to grow our money as we prepare for new investments, put us in a position where we started learning about concepts like land banking. Won't go into detail about it for today's conversation, but what I'll simply say is that land banking puts us in a position where we're able to invest in land in the path of growth, meaning right now we're invested in an area, Green Energy Valley, California, Antelope Valley, our neighbor, that's Warren Buffett right there in the picture. But if you think about the profile of this area, LA already overcrowded, yes?
Yeah.
Mm-hmm. Yes.
No room to develop to the west because that's the ocean. The south is another country. To the north is the mountains, but to the east is this little area that's growing by leaps and bounds where we're able to invest in land in the path of growth to be in the way. And imagine this change in appraisal, meaning from last year to this year, our prospectus was we were expecting about a 20 to 25% increase in value. What about 43%? We put 50 in, that came out worth 79 after a year in. That's money doubling in a place that I got to tell people say, Richard, you're real excited about real estate, not to be a real estate agent. It's like, I believe that earth is the greatest investment on earth because God's not making any more of it. Right? And so, if you think about, those were the things that our company did before the spring of this year. But the thing that I think I'm most excited about right now is where we've gone with our real estate partnership in terms of our real estate platform. We made a partnership with a company that already done $100 million in real estate, specifically focused on flips and investment property, to now believe we have the ultimate platform and community for people that want to accumulate wealth with real estate, meaning we have a platform for buying, selling, flipping, and investing in property without the risk. Meaning, and I'll talk about this in a little more detail, but also want to introduce one of the first certified realtors in the country when it comes to our certified realtor program, just to talk about the benefits of expanding her practice through educating people in the ownership process. At a high level, we'll have a separate lesson where we teach people the process of buying a property, the things that they need to know, because most people don't, right? Or they learn the hard way. How many of you learned the hard way? But the second thing is, as capital contributors, to be able to invest in a property without the headaches and the frustration of finding contractors, finding the property, but we do get that guaranteed return. Imagine 20% return per annum plus 1% of equity on a deal. What does that mean? For those of you listening in that are investors, imagine you put 20,000 into an investment in real estate to flip a property. That's a part of our capital contributor program. As a capital contributor, our company guarantees 20% use of the money they pay the whole year, whether they use it for a year or not. So already that's $4,000, your $20,000 made. Everybody following so far? I have to put this on a slide so that people see the numbers, not just in my head, right? But then say our property after repair value is $200,000. 1% of that after repair value is another $2,000. That's $6,000 that we made in profit in that transaction. And imagine that we took that money from our private reserve account to fund the deal. Now the money's doing two things at once. It's both working and growing in the asset class as a private reserve account, but it also made active money in income, $6,000 on the investment, and helped somebody who previously couldn't qualify for or didn't know the process for qualifying for a house to get into the house. But now, Stephanie, let me step aside for a second and let me introduce you properly so that people get to know who you are. Stephanie Stewart out of Milwaukee, Wisconsin, has the brand Educate to Own. And what she's found is, as a practice beyond the real estate and the selling of properties, she's distinguished herself as that person that will help you qualify for the house on the front end, meaning get your numbers in shape, identify the property that you need, get it up to the conditions that you want, pay off the house in record time. So we take 30-year mortgages with our debt elimination strategy and turn them into 8 to 12 so that you end up owning the property, not just managing the property for the mortgage company, and then positioning you to invest in the next deal. So just that extension builds the relationship further so that she has money on both ends and gets referred more often. But Stephanie, and then the other thing, when you do a deal with us, you do get that opportunity to make a bit more. Let me let you share your experience. I'll be quiet and take notes here.
Everybody, thank you so much for that warm introduction. Most definitely, Mr. Richard Hardon has definitely been a fantastic contribution that I've met into my life that's really been able to take my real estate from step 1 to step 20. Just by introducing me into this program, Make Wealth Real Financial. So what I love most about the real estate part is it does help even the least amount of qualified person. So that 580 credit score, those lower end numbers, who some people are going to say you're not qualified. You have to have 5, 10, 15% down payment. You have to, have all these other things that steer you away from getting a house. Make Wealth Real Financial makes you in position so that you can get a house. So for one of my clients in the past, I brought him through the program because other lenders were telling him, no, higher down payment, whatever. And the crazy thing is he was a vet. He didn't have to put down a down payment. And I was able to bring them into the program. They was able to increase his credit score, work on the debt that he had. So now that he went from not qualified to, no, it was 385 pre-approval. He could have went to 400K. I just told him don't do all that. However, but to go from unqualified to up there qualified has definitely been that big jump. And believe me, the house he has is immaculate versus something that the bank was telling him that he needed to get because his numbers weren't right. Mm-hmm. Now, in addition to this program, now I'm not saying that if you have a 580, we're going to just give you a house. No, that's not what it is. It is working with a team of experts to sit down with you in your own personal situation, to work on your own financial situation, and you let them know where you want to go. If you're saying, I want to own multiple properties or whatever else, they'll tell you what you need to do, but just know that that has extra cash flow, down payment, all those other things out there. When it comes to flipping is what I really love, because I love my investors out there who want to take something ugly and make it pretty. Our investor program is great because you can be your own contractor, just like how you are at Hard Money. Now you will be monitored, and if you want to make some extra money, things like that are great. Or you can kick your feet up, watch it from your app and say, they installed the flow. I don't even want to pull up that carpet. You can say, oh, they installed the lights. I'm not an electrician. You don't have to do the work if you don't have to. They already have the people for you. And it's the difference from the do it yourself versus done for you system. So the program has definitely been immaculate. It's helped so many of my clients, and it's really just making a difference in the world because everybody is not qualified or they don't even know what it takes to become qualified. But this program is willing to sit down with you and take you from either unqualified to qualified and or qualified with high payments, high interest, high down payment to bringing those numbers down.
And I like to call it tragic and magic. Because it's one of the things. And for any of you that want to see how Stephanie integrates this in her practice in terms of the education she provides, with education being one of the #1 marketing tools in the world, especially in the times that we're in now, just get in touch with me. I'll let you know about upcoming events, but we do something every week to help people through those things of first understanding what your credit score is, 2, understanding what our team can do about it, and 3, giving the accountability and coaching for what you can do about it, while at the same time getting their debt to income ratios down. And for most people that work, increasing the amount of money that they bring home, which accelerates the pace they can build a down payment. Does that make sense?
Absolutely.
Awesome.
And not to mention,
go ahead.
And not to mention the Fire Your Landlord program. So that's going to be a program for my renters. So if you've already been renting and you're trying to either work on getting qualified, you don't have the down payment, everything in order, you got some steps to work on, there is a program that you can go ahead and put yourself in after 30 days of the membership, and they'll help you go through that system. And that gives you about 6 to 8 months to get it together. Not saying it should take you that long, but you have some time frame to really kind of put your ducks in a line to then go from renting to owner. Because what people don't realize is the amount of money you're paying in rent is almost double what somebody's paying in mortgage. So just keep the cash flow coming in and keeping that positive cash flow coming into you versus somebody else.
Awesome. Awesome. Man, give it up one more time for Stephanie. Just for perspective, and this is the thing that we're realizing about the speed that our community is growing. There are very few certified realtors with the MWR real estate program nationwide. We're always looking for more. And by the way, when you do deals with us, you still keep your brokerage structure. Everything that was true about your business and practice before is true. But we do pay an extra 1% at close.
1%. That means your 3%, add another 1%. Now, that don't sound like a lot, but us realtors know that could be thousands. So go and get your money if you are a realtor.
If you're going to make 3, might as well make 4. If you're going to make 6, might as well make it 7. And that, all of those things. So if you think about everything that we talked about so far, the tax reduction, the bill strategies, debt elimination, credit restoration, all of that's included in the membership at the $80 price point for people that were like, well, I forgot how much this costs. And you should, because if I think about the hundreds of thousands of dollars it has saved me, I wouldn't do without it. Does that make sense? Mm-hmm. But there is a category of people that's like, well, Richard, you're extra excited. Well, it turns out that there's a way to make significant money as a referral agent with what we do. Now, obviously, you decide which level of collaboration makes sense for you. If I had the opportunity to save money and make money, how many of you would like to make the money too?
Absolutely.
Yeah.
And the best thing about the money that we generate, I don't have time to get into the details of how it all works. What I will say is it's leveraged, passive, non-wage income, meaning the funnest money on earth. And you get the advantage of doing it from home. The investment, $228. What's in there? It's your business initialization, your first month of membership, and your website, then $119 a month. So for $228 one time, $119 per month, which includes the membership. So again, I'm not just somebody that talks about the membership. I'm an active member using the experts to build my financial house. But we do earn unlimited income, get paid multiple different ways. And I think the thing that's exciting about it, I think about when I got started as just a referral agent and a customer, using the brokerage model, we were able to go initially to $5 a day, which is $150 a month, then to $600, $900. Right now we're at just under $4,000 a month in income through the various bonus plans. It all comes from the same source though. That is referring members. referring members who decide to take advantage of what we do. They have a luxury bonus that kicks in, starts out at $500 a month, goes up to as high as $3,000 a month. Now, I know for some realtors out there, you could have a month where you make $30,000, $40,000, $50,000, followed by a month where you make zero. This ends up being what they call income stabilization, meaning if you're guaranteed to make an extra $2,000, $3,000, $4,000 a month, that puts you in position like, our friends, Kat, Christy, Don and Ruthie, all kinds of success stories spread across the country. But since he's here, I want to talk about a specific success story you see on the line. It's Dana Turnquest, because congratulations are in order, sir.
Well, thank you, sir.
Now, here's what I'm congratulating Dana for. Dana and I have actually been in contact and in home business for years, but one of the exciting things has been watching Dana grow his organization and his income and adding this stream of income to the one that was already there through his rental investments. You want to talk about how that worked for you, Dana?
Well, how it works is pretty simple. Listen, so if you're, whether you're an investor or whether you're just a person who is a W-2 employee, Rick covered it pretty well. You need cash flow expansion. You need to create income even when you're not working, and you have to have your assets growing. I don't care if you're an investor or in real estate, you need your cash flow, of course, to grow, which is the amount of money coming, the difference between money coming out and that's coming in. And you need your income to grow, because if you can only trade money for dollars, time for dollars, then you always have to work. You want your assets to grow, because at some point you're not going to be able to continue to work. With this business, between the bonuses and my wife and I's daily pay, we built up a business that's a $2,500 a month business. That's $30,000 a year on top of the rental income that we're getting in. So those two vehicles alone, if they continue to grow, then the opportunity for me to work diminishes. So that's the name of the game. And
Right.
When you can grow residual income, money that comes in, whether you're working or not, I don't know what's better than that. I really don't.
Right. And and that's the thing. If you think about that diversified account portfolio, it's got some money in the market. It's got money in the private reserve account, income coming passively through this business as a vehicle. We're able to grow 4 asset classes on one investment.
That's it.
Right. It's exciting what we've been able to do. And now I will say we covered a lot in 55 minutes, and that's my time. We got to go. Right. This is the name of this game is financial education and execution. There are a lot of books out there, but there's never been a system that I've seen like this that helps people that are out there like me and you go through the process of moving cash flow quadrants together and educating as we go. And that has been our focus, is if we just learn to educate the most people, that's how we win. Vinci, I do want to introduce you to my mentor. That's Brian M. Bean. He's out there on his lakefront property. He just bought 20 acres south of Atlanta with Ludacris as his neighbor. And what's Denzel Washington's son that was in Tenet?
Denzel's son is just fine.
Denzel Washington's son. And it's just exciting to think about that process of going from employee, college student to now owner of multiple companies and organizations, and continuing a process of building. And if this has made sense to you, there's 2 things I do want you to do. Make sure to take advantage of continuing education. I know I only skimmed over how all of this worked, but we do have the blessing on this Wealth Building Wednesday of having 2 events later this evening. Chuck Hardon, I see him down there muted and off screen, but he's actually the person that introduced this concept to me, but changed what our family legacy is going to be by a simple conversation. And then later on, one of my best friends in the world, but now, former high school teacher, now teaching people money at night at 9:45, Sean T. Hill will show how he went from brand new, afraid of financial conversations, to now making more money than it took him 25 years and a master's degree in math education to make in less than a year. Powerful conversation. And then this week, also tomorrow evening at 8:30 p.m., our Financial Edge University, where our experts teach people how to execute. They'll be talking specifically about private reserve accounts and how you can become your own bank. Because the most important thing in the financial education process is that you learn, but then you put the information to work, you remove the L, and then you can earn. So quick recap of what did we say today? When it comes to our financial edge, it's a win-win for everyone. If you're already in a position where your mindset is set on making money in real estate, whether as a real estate professional or an investor, the only way you can lose is not to find a way to participate, meaning buyer gets all the benefits of their credit, the equity, lowering their debt to income ratio, they reduce their liability, and they get to own the house. But as a buyer agent, you get to differentiate by creating clients instead of competing for them, who start to refer you before they even buy the house. You start turning renters into buyers, and then now you even have a way to get paid on your turn downs, and you can recapture past turn downs, and the pipeline that we're growing, it's incredible. And the bottom line is you get to close more loans or sell more homes, and you just decide which number makes sense for you. And number two, you just want to expand your cash flow, $79 investment, $79 a month, no contract, no cancellation. You decide that you don't like the help that the experts give you. We're one of those places. It's a full money back guarantee that we can help you financially. And I'm not saying that, that's the company backing it up. And then if you're a number one, you want to save money, make money, and grow the money. $228 one time, $119 a month. If I think about my initial investment versus what we cash flow on a monthly basis, $228 now makes me no less than $4,000 a month. It's a better return on investment than each of the rental properties I've invested in so far, and we're just getting started.
Facts.
All right, so with that, that's my time. I'm gonna end the recording, but I'll stick around if anybody has questions. I know we try to pack a lot of value into the hour, because it's not how much you get paid for the hour, but the value you bring to the hour. So with that, I will say good night to people on the recording, but if anybody that has questions, we'll stick around to take care of those.